In the stock market, we always hear the phrase buy the dip. More often than not, the dip in reality is the beginning of a stock starting to slide downwards. But right now, coming towards the ends of 2023, we have been given a massive opportunity to buy the insane dip on an industry which is going to be massive in the coming years. Not only that, but the three companies that I talk about in this video are already hugely profitable. Yes, undervalued and hugely profitable. Lithium stocks are crashing and lithium prices are at the lowest they have been in more than 2 years. But does this create a huge buying opportunity? What's up guys and welcome back to the channel. In today's video I will be talking about 3 lithium stocks which in my opinion are the best lithium stocks on the market. They have fantastic profit margins and each one of these has just hit their lowest price in years. Everybody knows that the switch to electric vehicles will continue over the next decade and lithium is the single most important commodity. When we talk about buying the dip, there could not be a more clear dip than this. So stick around until the end of the video. Each of these 3 stocks offers different but fantastic global opportunities. It takes a lot of time to do this research. All I ask is that if you like this video, then hit the thumbs up. It's greatly appreciated as usual. And if you enjoy the content, consider subscribing to the channel if you're new and hit the bell notification so you don't miss out on upcoming videos. Now let's get into it with the very first stock, which is also the cheapest of the 3 by market capitalization. Piedmont Lithium is a Nasdaq traded stock, ticker symbol PLL. Piedmont is a company in the development stage that is involved in exploring and developing resource projects within the United States. It is regarded as one of the best lithium stocks to invest in. Piedmont have a wide project portfolio, including projects in Carolina, Tennessee, Ghana, and Quebec. Earlier this year, Piedmont Lithium Sayona Mining announced the resumption of a commercial production at the North American Lithium Project in Quebec, which is jointly owned by both companies. To date, the Quebec project is the first to have actual production, while the other projects are still at least a year away from production. But the company is expecting revenue to begin this year and will be releasing their financials in just a few weeks. This is a company with plenty of cash in hand and also has qualified for government grants. But Piedmont also already have commercial agreements in place with some major companies such as LG and Tesla, and earlier this month Piedmont signed a deal to acquire an equity interest in a newly formed lithium project in Newfoundland. Looking at the latest financial statements for Piedmont Lithium, we can see that they have a very strong balance sheet. The company has total assets of $342 million and total liabilities of just $17.5 million. Piedmont Lithium have $88 million in cash and total stockholder equity of $325 million. So overall, this is a very strong balance sheet, but something that needs to be remembered is that this is a pre-revenue company. Although their assets have increased by nearly $60 million over a 6-month period, Piedmont have made a net loss for the 6-month period of $19 million. The biggest expense for Piedmont is this general and administrative expenses of $20 million. But when we look at the notes to the accounts, we can see that this increase in cost is due to hiring additional staff rather than for a huge increase in management compensation or management bonuses. Overall, this is a very strong balance sheet and there is nothing to be concerned about. Piedmont is currently trading at a market cap of just $580 million, while their stockholder equity is $325 million. So this is definitely one stock to watch going forward, with the stock trading at its 52-week low. Looking at market beat, we can see that the analyst consensus price target for PLL stock is $128, but the most recent price targets that were set back in August have set price targets for the stock of $184 and $95 respectively. Now, although there is a huge gap between these 2 price targets, one is nearly double what the other one is. One thing is for certain, both of these are multiple times above the stock's current price. And this is at a time when lithium is back to its lowest price in years. The next stock on the list is Albemarle Corporation. Albemarle is not only the largest lithium company by market cap, but also the top lithium producer in the world with over 7,000 employees globally. Albemarle have a broad portfolio of lithium mines and facilities, and as expected from the world's leading lithium company, they have facilities all over the world. They are working to expand their role in domestic production and processing in line with the government's Inflation Reduction Act. The company owns the Silver Peak lithium brine operations in Nevada, which it plans to double the site's lithium production by 2025. So not only is this company the largest lithium producer in the world right now, but they have the potential to triple capacity by 2030. Now, if you consider the recent drop in price of lithium over the past few months, Albemarle have revised their full year 2023 guidance estimates of over $10 billion. Now, imagine when lithium prices begin to go back up again, and this company is producing 3 times the amount of lithium that they are currently producing. Think of the possible revenue increase that this will have when lithium prices go back up. And they don't even have to go back to all-time highs or anything like that. With prices currently at rock bottom, the profits of these lithium producers is going to go through the roof when the price goes up. These companies are already profitable as it is. Albemarle are projecting to maintain this strategy to deliver huge growth, with the expected compound annual growth rate of 20 to 30% for the foreseeable years. Looking at the latest financial statements for the company, we can see that they have an incredibly strong balance sheet. The company has total assets of over $19 billion and total liabilities of about $9 billion. They have cash and investments totaling over $3 billion and total stockholder equity of $10 billion. So overall, this is a very strong balance sheet, as you would expect from one of the world's biggest lithium producers. And they have a massive retained earnings of over $7 billion. When we look at the statement of operations, we can see that they have total sales of nearly $5 billion and total net profit of nearly $1.8 billion in just 6 months. When we compare this year-over-year revenue, we will see that the company has nearly doubled its sales and trebled its net income. Altogether, this gives a fantastic rate of return and gives the company an EPS and gives the company an earnings per share of $16 in just 6 months. Looking at market beat, we can see that the analyst consistent price target for ALB stock is $260, with the most recent analyst rating ranging from $160 up to $280. This means that analysts are expecting this stock to more than double from its current price, and with average trading volume of about 3 million shares per day, there is certainly lots of interest in ALB stock, and a price to earnings ratio of only 4.17, which is extremely low. So not only is all of this great, but it's important to mention here that this is huge trading volume for a company whose share price is $138. We're talking about, on an average day, about $500 million worth of their stock being traded. Like comparing this with, say, penny stocks, for example, that might have 100 million or 200 million daily trading volume, but that would only amount to a fraction of the value of stock that is being traded here. In my opinion, this is a very undervalued stock. And finally, in my opinion, this is the best pick of the stocks on this list, and that is Livent Corporation, who have a major upcoming merger happening that could act as a huge short-term catalyst. Livent manufactures and sells performance lithium compounds primarily used in lithium-based batteries, specialty polymers, and chemical synthesis applications in North America, Latin America, Europe, the Middle East, Africa, and Asia Pacific. Livent has slumped to its lowest price in 3 years now due to the falling lithium prices, but this company has huge potential. This is a company with global operations with offices and facilities spread out all over the world. Livent also have supply deals in place with some of the world's largest automakers, such as BMW, Tesla, and General Motors, to name just a few. Looking at the latest financial statements for Livent, we can see that they have an incredibly strong balance sheet. The company has total assets of over $2.2 billion and total liabilities of just $630 million. The company also has $167 million in cash and a further $445 million in investments, with total stockholder equity of $1.6 billion. So overall, this is a very strong balance sheet, and it's getting better, as we can see here. Total equity has increased by over $200 million in just 6 months. And the reason for this is very simple. As we can see when we look at the statement of operations, this increase in equity has not come from something such as stockholder dilution or a business merger. This increase in equity is largely attributed to the fact that Livent Corp is an extremely profitable company. Over the first 6 months of 2023, they recorded revenue of nearly $500 million with total net income of $205 million. This is an incredible rate of return, an incredible profit margin, and gives the company an EPS of $1.14. So this is a fantastic article on Seeking Alpha that I came across over the weekend. Livent Corporation, now is the time to buy. Now, I won't go through this whole article in detail, but there are a few things that I want to point out. And these are mentioned here at the very beginning in the summary. So Livent has been able to enjoy higher realized prices in the second quarter despite lithium prices declining. And Livent is a company that is on the right track to enjoying long-lasting competitive advantages because of two main reasons. Guys, I'm only going to just look over a couple of points briefly, but there is a link to this in the description below. So check that out if you're interested in this company. Anyways, the first point here centers around three key expectations. First of all, electric vehicles will account for more than 50% of new passenger vehicle sales by 2030. Now, this is incredibly likely as the whole world is focused on carbon emissions at the moment. With the shift towards zero carbon footprint, there is already a lot of countries in the world that have massive EV sales. Countries where EVs are massively outselling traditional ICE vehicles. The top 5 countries with the highest share of EV sales are Norway with 80%, Iceland, Sweden, and the Netherlands with 41, 32, and 24%, whereas China has 22%. And considering that China is the biggest car market in the world, these numbers are massive and they're only getting bigger. Anyways, the lithium supply will remain constrained through 2030, paving the way for price stability. And Livent will have access to low-cost lithium carbide production facilities in Argentina, giving the company a competitive edge, which I'll just talk a little bit more about. So Livent's assets in Argentina will help the company compete aggressively with its peers, eventually helping the company enjoy competitive advantages through cost advantages. Second, consolidation among lithium producers will eventually increase barriers to entry, helping established players enjoy competitive advantages. And this is where Livent's merger comes into play. Their merger with Allkem is a step in the right direction, as this deal opens the door for the combined entity to enjoy scale advantages. This merger will make the combined company one of the biggest lithium companies in the world. And when their merger with Allkem goes through before the end of this year, this will make the combined company one of the biggest lithium companies in the world. Looking at market beat, we can see that the analyst consensus price target for LTHM stock is $29, but the most recent price targets, which have been set in the past 2 months, are closer to $33. This means that analysts are expecting this stock to more than double from its current price, and with average trading volume of nearly 4 million shares per day, there is certainly a lot of interest in this stock. So guys, what do you think of that video? If you enjoyed the content, then smash the thumbs up and subscribe to the channel. If you have an interest in the EV market and would like to see some great DD on one of the biggest stock market scams of recent years, then click on this video that is on the screen now. And if you would like to see me make a more in-depth or detailed look at any of these stocks, then please drop a comment below. Or if there's any stocks that you think I should be looking at right now, then comment and I will look at them. Thanks for watching, and I'll catch you in the next video.